Today, I see how awesome life can be. Beauty all the way, power to shape my day. Thoughts become real. One with all is what I choose to feel. I choose now.
So we're talking about mortgage processing today, and we pretty much got through all the things that we have to do after we've got the purchase agreement accepted. And so now I want to talk a little bit about verbiage because it can be very confusing.
Absolutely. Now, there are a lot of stages of approval. As you know, you've got the pre-qualification, and then you got a pre-approval where there's some more information, automatic underwriting approval, documentation. Then you have a conditional mortgage commitment, and that's what you get after you get the purchase agreement, conditioned on all the little things. And you go back and forth in underwriting, send the information, but here's the words that you want to listen for. You want to listen for clear to close. Everybody in our industry wants to hear the words clear to close. Now, that doesn't mean we're not going to need extra stuff. We're still going to need stuff like the insurance. We're going to need the file insurance and everything like that. But clear to close means we can schedule the closing and have the paperwork ready for it. And I remember one time I was talking to a customer. It was a difficult deal, a lot of back and forth, a lot of complications. And I called this lady up. I don't remember who it was anymore, but I was like, I was so excited. I'm like, yes, we're going to clear closing. We're going to be able to do it. I don't know what I said. She goes, I don't know what you said, Rosemarie, but sounds like it's good. I'm like, yes, yes, it's very good. Clear to close means you can schedule. That means pretty much the borrower conditions are all handled. All the upfront things we need from a processing point are all handled, and that's when we can actually schedule the closing. Now, you schedule the closing generally on a purchase. The listing agent will schedule the closing at the time and place it's mutually agreed upon. They tell us, the lender, and real estate agents generally hook up with the buyers, make it so it works. Notify the lender. Me as the lender will notify my team, my processor. My processor will do what she has to do and send it over to the closing department. And the closing department, when they have it, there's work that still needs to be done. And a lot of people don't understand that. I've had people say, okay, we got it clear to close today. I want to close it tomorrow at 9 o'clock. And they don't understand the work involved. Just because we're clear to close, we do a little celebration. That doesn't mean tomorrow we're going to the closing table. Possible. I mean, if we get clear to close early enough and, we close late enough, but there's a lot of work that needs to be done. It's mostly, it's just pulling things together. I've done actually work closing and processing. So I've had actual experience doing this a long time ago. But what ends up happening is we've got to get all of the final documentation, like for the insurance and all the final numbers, all the invoices, every fee on every lender fee on the closing disclosure needs to be backed up by invoices if it's from outside parties. That's when customers are getting their initial loan estimate. Those initial loan estimates are pretty much binding. I mean, there are some things that can change in circumstances. You change the mortgage amount. Yes, some of your costs are going to change. You change your mortgage program. Yes, your costs can change, but minus a viable change in circumstances, you can't change the numbers. So, and that's how, when you're doing a loan estimate, when you're putting a loan estimate, there are certain numbers that if it's a penny higher, the lender's paying. And what a lot of lenders do is they want to take it out of the loan officer's pay. Who does that? I'm not sure it's legal, but I've heard some companies say they do that. If I estimate the cost of the appraisal to be $550 and it turned out to $575, I am personally paying for that in some cases, in some lenders, and the lender is paying for that. So how do we know that the lender's going to charge us an extra $50 fee because it's outside his 20-mile radius or whatever? We don't know. So what you'll find is a lot of inflated prices on the loan estimate. I mean, I don't know. I would like the doctors to have to do this. Give me an estimate of how much it'll cost, and if it's more expensive, you're paying for it.
Right. That would
I
be
mean,
pretty good.
it's like, it's a little bit, I mean, and like, there's reasons to change, and I understand there was a lot of abuses, okay? But the lender's fees cannot change. Title fees, things like that, they can usually only change between like 10%. Recording fees that the state gets, we have to get it exactly right or pay.
Mhm.
So usually the actual closing disclosure is, in my case, is significantly less than the loan estimate, because you just pile all that stuff in the loan officer, because in the loan estimate, because you don't want to pay for somebody else's fees. And it is, I think, a little bit crazy. I mean, it's overkill. There was a lot of deceptive lending going on and excessive fees that got added on willy-nilly.
Mhm.
Well, not willy-nilly, they had rules back then too, but and some change was needed. Things like in Michigan, proration of property taxes. Michigan, we pay property taxes ahead of time.
Yes.
So if you sell your house, if you buy a house, you're gonna owe the seller property taxes that they've paid and have not used. I almost lost a deal one time because the customer was being real diligent and he wanted the best deal. And I was a couple thousand higher. And I said, that's not right. Let me see what you got. And it was that the seller proration of taxes wasn't listed. I mean, that was before. Now they say you have to list something. Real estate transaction fee, real estate commission, all fees have to be disclosed on the loan estimate. And if the loan officer, the lender, should have known, then you can't do a change in circumstance.
Mhm.
So and you can't add it. So it's the closing disclosure is the final summary of the money, how it's changing hands. And you get that at least 3 business days prior to closing.
Mhm.
But in real life, I mean, that's the law. It's 3 business days prior to closing. But in real life, what you get is an initial closing disclosure. And what I tell the customers is this is for government reasons, to show you, although we don't have the final numbers calculated yet, this is to show you that you've got the same program as I told you were going to have,
Yeah.
and the same interest rate and the same discount points, but all the fees are not finalized. But that's showing you, I'm giving you the deal I told you I was giving you.
Right. Well, you made up a good point too. Insurance. There's the insurance fees, and whether that's going to be in your escrow or it's going to be paid in advance. And usually it's paid a year in advance with
It's always paid a year in advance.
yeah,
Well,
if
homeowners.
if it's not put in the escrow. And the
It's
same
always, it's paid a year in advance, even if it is put in escrow, Mary.
right. But yeah, I mean, it's always, if it's separated from your escrow, you need to realize that it does take the whole year.
And yeah, and actually, you bring up a good point where I know Michigan is kind of unique in paying taxes ahead of time, but homeowners insurance ahead of time, paid it in advance. We paid it in advance, and then every month you're paying 1/12 of your taxes and insurance.
Mhm.
And customers say, if I already paid a year in advance, why am I paying 1/12? Well, because next year it's going to come due. We're going to have to pay that whole people say, well, can I pay my own taxes and insurance? Under some programs you can. Conventional 20% down or better. Some non-QM loans, non-quality qualified mortgage loans.
Mhm.
But generally it's more expensive. You pay like 0.25%, just extra discount points. If you have your escrow account waived, if you qualify, you can request a waiver. And in fact, I started seeing that mortgage companies, servicers, people are paying their taxes and paying their mortgage pay. If they ask to pay their own taxes and insurance, I've seen companies now they're charging like $250 to switch it. Yeah, I used to do it. I think it's because I told customers, if you want to waive your escrow account, why don't you get the loan set up with an escrow account, wait 6 months or a year and then ask for it? But I think they got wise to us and now they're just charging every time people want to change something like that.
Right. I know I set up one of mine without an escrow account from the beginning.
Mhm.
And that was just mine. But the caveat here is that if you are late, or if you, by some chance forget to pay those taxes, in the state of Michigan, I know that if you forget to pay for 3 years, that someone else can take and pay those taxes, and they usurp your lender on the lien. So it's
That's why lenders like to have escrow accounts.
exactly. So there's always something that you need to consider too. Same with your homeowner's insurance. Say you forget to pay your homeowner's insurance. That's a really difficult thing. And once you don't pay your homeowner's insurance, then getting homeowner's insurance again, your price goes up, and they have to evaluate whether or not your your house is in the same condition that it was when it was insured.
You bring up another point. If you don't have insurance on your house, if for whatever reason it's canceled, the lenders have something called forced placed insurance.
Mhm.
That means they put insurance on, and all right, this is my opinion. They look for the highest price insurance companies available, probably make some kind of a legal kickback,
Mhm.
and the forced place insurance is like 3 times what normal insurance would be.
Right, and
Um,
it's not as good.
Probably not. I haven't looked into that. I've only been on the side where they had insurance. They had insurance when you force placed it. You got to take off the force place. Here, I got proof. I
Right.
don't know all the details on the servicing side. I just know the panic on the buyer side.
Absolutely. So there is a big caveat. We know of someone whose insurance did lapse, their house caught on fire, burnt to the ground. Yeah. And guess who's still paying for their mortgage on a burned down property?
Well, yeah, and that reminds me of another kind of insurance. It's called mortgage credit life insurance or something like that. I used to sell a lot of it back in the day, until I found a better alternative. There is an insurance you can buy. Usually you could buy it through the mortgage company or usually through the vendors from the mortgage company that will allow you to pay X amount of fee every month. But if you die, your house is paid off. That, and I haven't sold it in 25 years. So, if I recall, there were a few questions that the customers had to answer, and they were medical related, right?
Mhm.
And then they were asking, have you been to the doctor at all in the past 3 years? I'm like, well, yeah. Okay, list them out. Who'd you visit? What? I'm like, no, you need to start paying me if you want me to sell this stuff. But what I found out is, although of course, it's more expensive the older you are, and I'm sure it's done through life insurance companies or somebody who has life insurance actuary tables.
Mhm.
But my dad had that on his car. He had some kind of insurance on his car. So when he died, his car was paid for. Had he had that on his house would have been paid for. But that would have been, I mean, he was 61 at the time. That would have been probably some couple $100 a month or something
Absolutely.
like that.
Absolutely, because it goes by age.
But I also understand that there are types of life insurance, like a declining balance life insurance policies that you can buy for significantly less money that will net you the same amount of money as you would get if you had your house paid off. So, and that's just one of about 7,000 different emails and snail mail and phone calls you're going to get when you buy a house.
And that takes us to a point too, is that, protecting your assets. You're buying a house. This is an asset. Even though the market goes up and down sometimes, your house will always appreciate in value to some degree, unless you let it get into disrepair.
In
Yeah.
the long run.
The long term, exactly. And protecting your assets. So, insurance, house insurance is really important, but life insurance is real important too. And so knowing how much life you have left, as far as the viable value that you would need for life insurance, is really important too. And so, not only is home ownership important and a great, a way to secure your, lifestyle, make it a little more stable. It's also something that you need to protect, and you protect it not only with homeowners insurance, but you also protect it with life insurance, which protects your wage for the, until you retire or until, you pass away. And the other thing would be estate planning, legacy planning. So you want to make sure that, your estate is handled appropriately when you pass. So those are things that need to be protected in your, when we talk about home ownership, this is an asset that you need to protect. And so that it needs to be protected in there. Anyway, let's go back to clear to close and scheduling the closing.
Before we go there, I want to just mention briefly, you can have the house, you can have people entitled to your house. There's different ways of sharing title. There's one customer had it where it became her house when her parent died, and that was automatic and it was written in. So you're going to want to check with the title company about different ways of holding title or different quick claim deeds that you can do so the house goes to the people you want it to go through without probate.
That is very important, and especially in states like Texas, because if the person who you are going to deed your house to after you pass, isn't on the deed, you have to file a specific form.
Yeah, I
them
don't
to
know
get,
what those forms are. I think I don't know what those forms are, but
Yeah.
yeah, it's definitely a good idea to handle that ahead of time.
Mhm.
Now we can go back to the clear to close. Yay!
Okay, so we're talking about clear to close, and we talked about a little bit about the coordination between the title company, the lender, the agents, the buyers, the sellers, how they all have to be kind of on the same boat, or it's a lot of chaos.
Well, not these days, you don't have to literally be on the same boat. You can be on different boats in different oceans and still close, but generally they want everything. We do things, I mean, they do things a lot electronically, but yes, everybody has to, all the final paperwork, they have to be on the same boat in terms of everything's agreed upon and they're all ready to go. And the lender's money needs to get there too.
Hmm.
Now, after the the closing department. They contact the title company, the mortgage company. They contact the title company, and they send over numbers, and they need the CD to balance. And I understand what that means. That means all numbers on the seller side and the numbers on the mortgage company side have to equal out, so that the lender knows how much of a wire to send to the title company. And the title company is the one that disperses the monies after all the appropriate paperwork and other lender conditions are met.
Yes.
So generally, after all the paperwork is signed, the title agent disappears into some room somewhere, sends out the paperwork, makes the copies, and waits for the lenders to authorize the funding. And
Now,
the
I do have a question regarding the title company.
yeah,
Most times the title company is chosen by one of the real estate agents, is what we have found. Usually in accordance with their brokerage agreements with, whoever does their brokerage. What we have found is that some of those title companies are not what I would consider very good. So
You
is
think?
there,
You
I,
mean the ones that kind of keep their eyes closed to the transactions and the order in which they happened?
or the ones that actually send the wrong amount of money to the wrong person?
That would be an error as opposed to, I
Oh,
mean, that would be an
yeah,
error as opposed to a deliberate thing generally.
right. But I'm
But you
saying
bring,
that, if you've got a title company that has a 2.0 rating, and this is the one that your real estate agent is recommending you go with, I just, having had the experience of a bad title company, what could we have done to remedy that?
well, number one, realize that the title company is your decision. That's the seller's decision, and it's the buyer's decision. And the buyer doesn't have to go through the same title company as the seller. Okay. Number one. Number two, understand that
Well, usually there are two title companies. There is one for the buyer and one for the seller. At least that's what
not
we found
necessarily, yeah.
in
Lately
our
they have
last.
lately they have split closings.
Mhm.
But I think and that's fine. You can have two title agents and two title companies, and that's fine. However, it's important to understand relationships and how, okay, first of all, most customers do not have a preference on what title company they go to.
We,
They
we,
they
us-
they, they
we
go to a
usually don't
bank,
know.
they go to a bank or a credit union, say, I'm going to go to that mortgage company because I've got experience with that company. Very few people have,
Right.
experience with title companies other than when they're closing the deal. They don't know what the difference is, and in terms of service and honesty. Now, what you do have a lot of these days, is what do they call it? Where you own the whole line of, I don't know if it's this way or this way, but you own the real estate company, you own the mortgage company, you own the title company, you own whatever. And you have a whole under one roof with different names. Okay. You are all the same. So as a buyer or as a seller, it's important to know what kind of relationships they have.
Yeah.
Now, used to be, at least in the lending business, you weren't allowed to give people money for referring you business.
Mm-hmm.
And it still is the case if you're an individual. You give me a referral. You say, will you take care of my daughter's loan? And I take care of your daughter's loan. I can't give you money.
Right.
If a real estate agent gives me a referral and it closes, I can't give them money. That's always been the case. It's side deals. It's bribes. Because when you refer somebody business as a professional, it used to be, and it should be, in my opinion, expected that you're getting that referral because that professional has experience with that person and they recommend that person, company or whatever, because of the job they do in the best interests of the customer.
Mhm.
That's not the way it works anymore because we all have agreements. This is
And even if they're not written agreements, sometimes they're oral agreements that, okay, if you service my customers, if you become my title company, this broker wants all of his agents to use this title company, because
well,
there's
generally the reason the broker wants them to use that title company is because the broker gets a kickback, owns the title company, gets some kind, and
right, right.
I don't know the laws. I know that, I mean, I have an opinion. In case you haven't noticed, I have a lot of opinions. But in my opinion, the best referral, if I'm a customer and you're referring me to somebody, I expect that you've got good experience with them. I don't expect that the reason you're referring me is because they line in your pockets. And it goes
Exactly.
directly against professional referrals. And this is why the business has changed. It has moved away. Realtors used to give loan officers, and I'm going to speak to what I know best, obviously, refer loan officers that would give them some certainty when they're out, spending their gas money, showing lots of houses, spending every Saturday with people,
Mhm.
that they can actually buy a house, good communication, negotiation support, all the reasons you would pick a lender. And that the realtors would choose a lender that has a loan officer that has those characteristics and also gets along with their customers and that kind of thing. But as early as 30 years ago, I know that they were the real estate agents were opening their own mortgage companies. They were incentivizing their agents to use them through whatever legal means
Yeah.
is possible. But what that does is that when you're getting pressured by the broker to use their title company, as long as the title company doesn't mess up the deal, you don't care. I mean, as long as the title company is relatively equal in pricing and whatever, as a real estate agent, you might not care. But the reason the real estate broker wants you to use them is because they line in their pockets.
Right.
And I remember I owned a branch of a company, and the president called me up and he says, well, I'm going to open a title company. What do you think about that? And he asked all the managers. I said, I think it's a direct violation of the intent of RESPA, the Real Estate Settlements Procedures Act. And I will not refer your title company business just because you're going to give my branch $50 for doing it.
Right.
It turns out the title agent was wonderful. She gave me great, I did business with her, not exclusively, but that's because she was great. Okay. It was the service. It was for my customers' benefit, not the $50 that's going to go one way or another on a P&L. And that's where the trust factor comes in. When you're a customer, you want to trust that they're referring you people in your own best interest, and almost nobody cares what title company goes. But that's some questions you can ask.
Yeah.
Is this
Absolutely.
affiliated with your broker?
Absolutely. So we have about 6 minutes left. I want to get through the last part, which is after you close, and you've got your cashier's check or you've got your wire transfer, your final walkthrough of your home. And then anything else that you think we need to cover to finish up the process of home buying?
Well, a final walkthrough is really important. Quick story: had a customer, final walkthrough. They had an unexpected frozen waterfall in their basement.
Whoa.
Because the pipes broke. It did not close that day. Sellers fixed it. It closed another day. Very important. Because that's,
Do you recommend the final walkthrough before closing then?
Oh, absolutely. Absolutely. You can't do anything if it's after closing. Nope.
Okay.
You absolutely do the final walkthrough the
You
day
did
or
not. We
Yep.
did not. Our real estate agent did not have us do a final walkthrough before closing. They took us to it after closing, where we found a hole in the wall that had been covered up by just a
Well,
painting.
that's not a final walkthrough. That is the first walkthrough of your house.
There you
Yes,
go.
absolutely. Always do a final walkthrough.
Okay, so
Always.
before you close, do your final walkthrough. Make sure everything is exactly the way that it should be.
Did they get out the debris? Did they fix the things there? Yeah, absolutely.
Okay.
And then after you close, because everybody is seeking new business in all kinds of ways, you're going to get bombarded with probably spam calls, telemarketers. You're going to get bombarded with mail. It's going to look official. They're going to use your lender's name to give it some credibility.
Yeah.
And they won't, most of them that I've seen don't say they're the lender, work in big letters. This is about your mortgage transaction with XYZ lender. So you think it's from them. I've had customers say, your company sent me something. I'm
Mhm.
like, send it to me. I'm like, okay, look on the back page, look in the small print. Yep. We're not your lender. It says it in the small print. You're going to be invited to buy title, deeds and all these different things you can do, your house warranties and oh, give us some money and we'll get you your deed. No, just don't. Call your loan officer.
Right.
Rosemarie, I got this. Send it to me. Yep, that's a solicitation for such and such.
Right. Just rip it up, throw it away. You brought up a good thing. One of the advertisements that came after one of the houses we bought was, you didn't file your homeowner's exemption.
Oh, we'll help you with the homeowner's exemption. Yeah.
Yeah. And if
$75.
yeah. But all you have to do is go down to your city offices and fill in the form and hand it to them for free.
Exactly. So
You
you got
know.
to spend the time to go to your city. Mine's 3 miles away.
Exactly.
Yeah.
Okay. So I think we've done a great job covering, your journey to homeownership. And I'm really excited, for people to give us feedback on what they found most helpful. So thank you.
So on the comment section below,
Yes.
you will find links to our sites and telephone numbers and more information. And yes, do comment, like, share. What we're trying to do here, what Mary's trying to do is putting a whole under one roof, all different kinds of ways, practical application of how you can be self-empowered, and yeah, there's a lot of the spiritual stuff that I'm sure she'll be getting to. This is nuts and bolts. This is what you can do in real life to get to choose your own direction, right?
Yeah, absolutely. Most people don't realize that they're paying rent over and over and over many, many years, and that rent is paying for somebody else's mortgage.
I had a customer that told me, she says she's in her 60s, and she said, I'm really scared of this, Rosemarie. I said, well, you scared of the mortgage process? Nope. I'm scared of buying a house. I said, think about it. Your rent's going up $100 a month. You have no control of what happens to it or if somebody sells it and they want you out. You're always going to have to pay a housing expense. I mean, unless you live for free with family.
Right.
And then eventually you're still going to have to pay some kind of housing expense.
Right.
So paying for a roof over your head is something that you're going to have to do in this environment. And whether you pay for it by investing in your own home or whether you're investing in your landlord's home is up to you.
Mhm.
Taking control over our lives, we control what we can.
choose now. I 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 choose